So the first pair we are going to be looking at today is definitely going to be the US oil as usual, and let's see what is really happening in this market. Well, we have a scenario since the beginning of the week where price has consistently trended right below the $86 mark. As we can see, every attempt by the buyers to push price right above the $86 level has been met with a very strong resistance from the sellers, and this is giving us a clue that the sellers at this point in the market is really very strong. However, during the course of our live session yesterday, we were able to identify this reversal pattern around this area after price came within this level on Monday. I think on Tuesday stroke Wednesday we saw this impulsive move which looked more like a bearish signal at this point, but because of the fact that I saw this double bottom structure here with a breakout of the neckline at the $84 area, we begin to think of a bullish momentum. However, during the course of the live session yesterday, I shared with you how I took advantage of this move right into the key level at the $86 area, after which we moved our stop loss to lock in some profit. However, what happened in the last 24 hours was quite interesting, as we saw price climb right back into our entry zone and even went as far as breaking right below that entry level into the neckline area at the $84 mark. And as you can see what is happening right now, price appears to have broken down the $84 area. So on the US oil for this week, if you had missed out on this bearish move that broke down the $85 level, which broke out of the channel that started this week at, well, if you had missed that move, you will probably be in a break-even position at this time. However, something interesting happened when I opened the chart here this morning. I noticed that how come I missed out on this bearish move, because I missed this move right to the downside, and I think I was caught up with the idea of this reversal pattern that we had here, and I missed that move. I should have considered the fact that price has been trending right below the $86 level, giving us a clue of how strong the sellers are at this point in the market. And one thing also happened during the early hours of today was the breakdown of this bullish trend line, which I actually missed as well, as we saw price break down, do a retest of that structure, leading price right below the $84 level. So with this current information we have at this point in the market, how do we intend to trade the US oil as we head into the New York session today? Well, in order to answer that, let's quickly look at what is happening on the daily time frame. Let's have an holistic view of what really is going on in this market, after which we are going to be coming back into this 1 hour time frame to make an informed decision in that regard. So scaling up into the daily time frame, let's quickly look at what we've been looking at since the beginning of the week and what has been adding to the ideas that we are looking for to a bullish momentum. So look at what has been happening here on the daily time frame. You can see that price has been on a strong bullish momentum since in the last 2 years here, and as a result of this we were able to connect the series of higher lows here to give us that resultant bullish trend line. And if we zoom into the current structure here, we can see that price has been respecting that bullish trend line in the last 1 month now. I think over a month thereabout, we can see every time price climbs right above that bullish trend line, when it comes back into that area, we start seeing reversal pattern coming in from that point, giving us a clue that the buyers are still very strong in this market on a long-term perspective. Now, in addition to this bullish trend line that I was able to identify here, we can see that since the month of June, we saw how price has consistently found lower lows and lower highs, leading into a situation where price collapsed right back into the bullish trend line, where we start seeing situation that will be supporting a bullish continuation pattern at the breakout of that bearish trend line. And as a result of the lower lows and lower highs, we were able to connect the series of lower highs here to give us this resultant bearish trend line. And if we look at what happened here 2 weeks ago, it was a huge significant breakout of that bearish trend line. And if we look at what happened here, we can see that the breakout of the bearish trend line also lines up with a very important key level we identified at the $86 mark. So we had a key level here. And if we look into how this level has been, our participants in this market has been relating to this level, you will notice that this level has been a major determinant of price action in the past. So with the current structure we have here and looking at it from a technical standpoint, whenever we cite a breakout of a structure like this, remember I told you the structure was broken to the upside. Whenever we have a breakout of a structure like this, what do we expect? We expect that price is likely going to come back, do a retest of structure, after which we look out for patterns on lower time frame that will be supporting a trend continuation to the upside. So in the last 10 days now, I think 8 to 10 days now, we have been witnessing this retracement move. As soon as price tested the $93.50 level, we started seeing this retracement move right to the downside. Although we took advantage of this move last week and we were waiting to see how far this retracement move is going to go. And at the beginning of the week, we saw a sharp rejection of that bearish trend line. Remember I told you this bearish trend line. I went to open my book. Okay, so I remember I told you that this bearish trend line was broken to the upside here, and during the early days of this week, we saw a very sharp rejection of that key level, which also pushed price to the upside at that point, giving us further emphasizing the possibility that buyers will be coming in from this area. And now with the information we have gathered here on the daily time frame, we really want to see what is really happening below the $86 level. As you can see, since the later part of last week, price has been trading right below the $86 mark. And one thing we have here looks more like a consolidation phase as price has continued to juxtapose between the $86 level and the $82 area. So we really want to see what is really going on at this point. So the only way we can see what is really going on here is to scale down to the lower time frame. So on the lower time frame, that is the 1 hour time frame, we begin to see, let's go to the 4 hours. Let's see what is really happening there. So on the 4 hours time frame, first of all, let's see if we can identify a structure around this area. So on the 4 hours time frame, well, we saw that at the beginning of the week, price was consolidating right within the $86 level and the $85 area. So we saw our price was doing a consolidation phase here, giving us a clue into the indecision at this market, as we wanted to be patient to see where price will be heading. And the only way we could know is if price breaks out of that structure or breaks down of that structure. And what happened actually on Tuesday was quite impressive, as we saw the significant bearish move that took price right back into the $82 mark. And with that being said, after citing that breakdown of structure, from a technical standpoint, whenever we cite a breakdown of a structure, we expect that price is likely going to come back and do a retest of that structure, which is exactly what has happened here. Price has rejected the $86 level one more time, and we can see that we had engulfing candle that took price right to the downside. And one thing that makes this whole scenario very complicated at the beginning of the week was more or less this reversal pattern that we identified here. And if you look at the structure we have here, we can see that the structure evolved into a reversal pattern in the form of a double bottom structure. And we saw the breakout of the neckline at the $84 mark, and we said, okay, fine, if price comes back to do a retest of the neckline, we will be looking forward to patterns that will be supporting a trend continuation on the lower time frame to join the trend continuation to the upside. So look at what has been happening here. As a result of this neckline area at the $84 mark, what we did was to identify a buy zone around this area. So we have identified a buy zone around this area, and if we look at what is happening here since Wednesday, we can see that there has been buying pressure around the $84 mark. And look at what happened here. We can see sharp rejection. We saw one here, we saw another one here. Though we saw another huge hammer candle here, we saw the sharp rejection. It shows us that the buyers, as there are still traces of buying pressure in this market. So this is more or less a very dicey scenario, a very ambiguous scenario. And the reason why that is, one, we have this $86 level, which is a very significant level which we identified on the daily time frame. And we can see since the beginning of the week, price has been trading right below the $86 mark. And because price has been trading below the $86 mark, we want to be thinking of a bullish momentum of I'm sorry, of a bearish momentum, obviously. But the evolution into a reversal pattern here makes us to make a rethink of what is really happening around this area, and price coming back to do a retest of the neckline at the $84 level is a sign that we might be having a situation that might be leading to a trend continuation to the upside. So we really need to be very careful of how we want to be trading this one. So going into the New York session today, what are the things we want to be looking out for to make a decision on this pair? Now, look at what has been happening since on Tuesdays when price came back into the $82 level, where it evolved into that reversal pattern here. After looking at the structure here, we were able to connect the series of higher lows here to give us this temporary bullish trend line. And with this temporary bullish trend line, what we want to be thinking of right now is that, okay, is price going to continue to respect this bullish trend line? So since the beginning of the week, that is on Tuesday, we saw the first touch, we saw the second touch around here, and we've been seeing multiple rejection before we finally saw the breakdown of that bullish trend line during the early hours of today. So from a technical standpoint, whenever we cite a breakdown of a structure, obviously we expect that price is likely going to continue to the downside at this point, as we might be looking forward to a retest to structure that will be giving us a confirmation to join the decline to the downside. So all these scenarios I've explained here is more or less from a technical standpoint. So we're going into the New York session today. What do we do? How do we trade this? Are we going to be seeing a bullish momentum from the neckline here to push price to the upside, or are we going to be seeing a breakdown of this neckline that might be inciting a trend continuation to the downside? So in order to have a better perspective into what our expectation is going to be like for today, let's scale down to the 1 hour time frame. So on the 1 hour time frame, what can we see here on the 1 hour time frame? Look at the structure we have here. So on the 1 hour time frame, we already have that significant breakdown of that bullish trend line that we identified on the daily time frame. And from a technical standpoint, we want to see a retest of structure to join the decline to the downside here. So if that happens, then the buy zone here will become invalid. So how do we do this now? So are we going to be waiting for price to come back into this bullish trend line to retest it, after which we look out for selling pressure that will be supporting a trend continuation to the downside? So that is one scenario. So what if price does not come back into this bullish trend line? So what if price does not come back into the bullish trend line? Where do we want to be looking at? Well, look at the $84 mark here. We can see we had a breakdown of that $84 level, and price appears to have come back to do a retest of that structure. So is this going to turn out to be a selling pressure? That is, we have a situation where selling pressure come in here, or probably we have a reversal pattern from that area that will be supporting a trend continuation to the downside? Or is it going to turn out to be a situation where price climbs up, does a rejection of this level, evolving into buying pressure that will be sending price to the upside? So you can see now that the $84 level is a very significant parameter that we want to be using to guide our action for the New York session today. So what I'll be advising at this point is that anywhere right below the $84 mark looks more promising to be selling this. So if we are going to be selling around that area, please we move our take profit target to line up with this trend line. Remember, there's the trend line that was broken 2 weeks ago on the daily time frame, and also it was retested during the early days of this week, and which incited that bullish momentum that we saw. So we want to be having our take profit target somewhere around the $81 mark at the meantime. And as soon as price comes into this demand zone level, that is, if we sell and price comes within this demand zone level, we want to move our stop loss to either break even or lock in some profit so that we don't get caught up in any situation that will be pushing price to the upside. And the reason why that is simply because of this demand zone that we have here. So we might be seeing a situation where price comes back into this area, rejects it, and continue to the upside, or we could see a breakdown of that structure, confirming that the sellers are still very strong, after which a retest to structure will give us a confirmation to add more position to our trade. So this is what we are going to be looking forward to at this point. So let's look out for selling right below the $84 mark. So if price comes right below the $84 mark, we want to be selling the US oil. However, even though we're expecting that bearish momentum, we cannot ignore the fact that the bullish momentum is very, very likely to happen at this point. Remember, we said something about the decision of the OPEC Plus 2 weeks ago to um, to cut oil production, and we saw the traces of that effect during last week. We saw bullish momentum last week on the US oil, and we're still expecting the second phase to happen. So we don't know how price is going to relate to the $84 mark, which is possibly going to send price to the upside. So we want to keep an open mind on this one. Let's see what is really going to happen around the $84 mark during the New York session today. So if we have price come below the $84 area, we want to be looking for selling opportunities. And as soon as price comes within the $82 mark, we want to lock in some profit or move our stop loss to break even at this point. So this is how we intend to trade this. And if price climbs up, we want to buy and then move our stop loss accordingly as price moves up in our direction. And if we finally have a breakout of the $86 level, then we want to be comfortable in our buy position, after which a retest of structure happens, then we add more position to our existing trade. So that is that on the US oil. If you have any questions regarding what I've just explained so far, feel free to drop in your inquiries in the comment section, and let's see how I can be of help in that regard. So that is that on the US oil. So if you have questions, let me know in the comment section, and if there are none, we'll just move on to the next pair.